You're watching The Open on BNN Bloomberg. I'm John Ehrlichman. We are less than 30 minutes away from the next decision on interest rates from the Bank of Canada. And one of the things in this higher interest rate environment that people have been talking about is the housing market. Obviously, higher rates complicates things for renters. It complicates things for mortgage holders. So there are a lot of people that are interested in seeing lower rates. But what was very interesting is the trend with home prices. Yes, they've come off their peaks, but perhaps they have not come down as much as some may have thought, given higher interest rates. Ed Devlin is back with us, founder of Devlin Capital, senior fellow at the C.D. Howe Institute, and former head of Canadian portfolio management at PIMCO. And this is a day where we will, beyond getting an interest rate decision, no change expected in rates from the Bank of Canada, but we'll get some additional commentary on how they're thinking about the economy. How are you thinking about the dynamics in the housing market right now?
So, I think that this flood of immigration post-pandemic has really complicated the situation, right? So normally I would have thought with interest rates moving up, 500 basis points, housing would have corrected significantly, and it's not. It's come off a little bit, but it's because of this immigration thing. I'm really interested in how the evolution of the dynamics between immigration and housing and immigration and productivity, because immigration and productivity is bringing in a lot of people, but a lot of them are at school, so school isn't producing a lot of GDP, right? The other thing is, how about these people have to live somewhere, and so these are dynamics that the bank, I don't think, really can control, but it does affect inflation, which is their primary objective, and so are they going to generally kind of look past it, or are they kind of very concerned? I think at some point they'll look past it, but there is a level of concern up there.
Well, the tight supply part of it, I've heard a lot of guests, people who are economists, talking about the factor the Bank of Canada has to think about if they commit at some point soon to cutting interest rates. We'll get a good sense on how many people have been sitting on the sidelines waiting for an opportunity to come into the market, because, to your point, prices did not deteriorate as much as some were hoping for, because you do have a support behind the housing market. And does that become an inflationary concern for the Bank of Canada? An unusual inflationary concern to be thinking about if they commit to lower interest rates?
If house prices move up and shelter costs move up, that's inflationary.
Yeah.
Right? And it's inflationary when they move interest rates higher and all mortgage costs go up and all that kind of stuff happens. But if you move it down and prices move up, that also has a bit of an inflationary effect. So they really are, we're kind of, this exogenous shock that is this immigration that's happened, that's basically uncontrolled or doesn't really plan for, it's going to take some time to work through the system. And this is a big issue facing the bank.
Well, we're seeing the growing pains from it, but at the same time, I think everyone would ask, if we weren't going down this road to help our economy for the long term, what would we be doing? We might look more like a lot of European nations right now. One thing I did want to ask you about, Ed, though, you talked about productivity. What's increasingly come up is the fact that in this country, the fact that you have to commit so much of your time, your energy, your resources, your capital to housing, does that limit our overall productivity? It is ironic if you think about where we were going back to the financial crisis, where the housing horrors were in the United States. Canadians were not as levered as they are today. Our economy navigated relatively well. It actually invited people borrowing money to get into the housing market. And for some people who became homeowners, I suppose that was a big investment win. But here we are now with these deeply indebted households. Do you think that ultimately that plays a role in our longer-term productivity? Just the fact that people have to put so much of their time and money towards housing.
Yeah. So let me just, on the immigration, I'll talk about immigration. Let me be clear. I'm very pro-immigration. It just has to be controlled. And I think generally Canada's had a good immigration policy, and I'm very for it. But bringing 1 million people in the door in a year, probably not the smartest thing to do. Back to the productivity question. Productivity, I think, is, I'm always very skeptical of a lot of these calculations, because, how do you compare, Canada's oil patch to the U.S. Silicon Valley, and all these numbers. But to your point about a disproportionate allocation to residential housing, I think that is true, and I do think that probably is a bit of a drag on Canadian productivity, relatively speaking. By the way, the Australians have the same issue. A lot of other countries have the same issue.
Yeah.